Right, good morning. I've just I've been having a few problems with the screen capture software that I'm using. It hasn't been recording sound, so hopefully it's working now. Right, I'm just going to go through how I start the morning. Even though we're starting like really late. Normally I'd start at either 8 or 9 in the morning, UK time. So it's currently 10 to 11. So because of the issues, that's ruined the morning, to be honest. What that does mean though is that I'm gonna instead of trading today in the morning, I'm not going to trade until New York time, unless something appears, unless I see something that I really want to get into. I'm just going to wait till New York time, the New York session. Sorry. So, just going through the setup, like the original, like setup that I do. What I would have done if I'd started early and if the screen recording software was working, I would have done this. So basically, on Eastern Standard Time on the Euro USD, I find the high and the low. So the high is there between so between 1 o'clock in the morning in New York and 7 o'clock in the evening. So it's this window that we're looking for the high and the low. So there's the high and there's the low. Actually, there's the low. So once you've found them, the next thing is to set up a Fibonacci extension going from the high and the low. On the high and the low. So you're extending up and down. Right. So then the next thing to do would be, you imagine you'd start this a bit earlier. So the next thing to do would be to set the lines like where you, in the direction that you think the chart is going to go, that you think the price is going to go. So based on the daily chart, you've got an obvious like upward trend there, plus the price is in this consolidation area here, and we've touched the bottom of the consolidation area a few days ago, so it's likely to continue up. It might not, it might, because of this wick here, it might come back down, but I think, well, I thought this morning that it was going to go up. It has actually gone up, like, so I'm not gonna I'm not gonna lie. So yeah, I thought that it was going to go up. So what I was looking for was either like areas to pull back to within this range, which would be ideal, especially for spot forex trading. So the main sort of levels I was looking for were these. And these are going to be green because they're where I want to buy them. Where I want to place a call. If a few other indicators sort of line up, so they're all green, and then with these we've got these red because they're going to pose some kind of short-term resistance. But because I think the price is going to go up, I'm going to be wary of these, of getting in them. too soon. So the next one would be here. Remember, like these are short-term pullbacks where these are going to occur, like if there is a pullback. So it's slightly different to trading forex, because with forex, with spot forex, because with spot forex you're looking for an area, ideally of pullback, to play the trend. With binary options it's slightly different, because especially like if you're trading Euro USD tends to be quite precise. When it touches certain levels it will pull back from them, or it'll come up from them. So the best way I've found to trade them is to just look for the levels, and when you get a touch of the levels, just either use a call or a put, depending on which direction, the opposite direction. So if the price was to hit 261.8, then as close as I could get it to 1.1215, I'd be looking to place a put. So that's what I'd do. Like first thing in the morning, I'd set that sort of grid up, and that grid helps me focus on what I'm aiming for, basically. So like what sort of price levels we're looking at. So if I follow this across each 5 minutes, you see like the 127 has been hit there. If you placed a 5 minute trade there, that would have won, annoyingly. Then it comes back up, and again, and then it breaks through it, and then hits the 161.8, and the RSI was quite high then, so that would have been another put. This put here, actually, yeah, ignore that. I probably wouldn't have gone for that, because the RSI is actually it's in a convergence with the price, so I wouldn't have gone for that second one. Even though it did come back, I wouldn't have gone for it, because of playoff divergences. So if you follow this down, you see there we've got the first sort of like green line, which is, I think it was 50%, wasn't it? 50% retracement from the Asian session, which was the box that we drew before, the Asian session range. The 50% retracement from there is another, well, it's a call. And then below that, we've got a touch of that, 23.6, so that's another call. And then from there, it moves up. So the first, the 261.8. If you see a move like this, like a really fast move, basically, it's not set and dry, but like the faster the move, the shorter the time frame to use. So as soon as this like sort of jumps up in like 5 minutes time, on the 5 minute time frame, then a short sort of like 1 minute or 2 minute trade, once it got to like the correct price for a pullback, would have worked out. I'll just change that to 2 minutes so you can see. So you see there, that would have worked out there. See, on the 1 minute it makes more sense. 261.8. Is that the right one? Yeah. So yeah, 1 minute trade would have worked there. 2 minute trade wouldn't have actually worked there. Go back to the 5 minutes. And moving across, you got the 423.6. Again, this is a red. I'm just going to use this because I don't need that anymore. So here we've got on the 5 minute a trade close to as close to that level would have been in the money. 5-minute one on this candle, the same on this candle, the same on this candle. If you get a few touches of the same candle, it tends to sort of go a bit wary, especially when there's a wick under here. But the RSI is quite high, but at the same time, the reason why this has gone up, as well as being in line with the trend, is because of news. I don't tend to like news too much, so I tend to reduce the amount that I trade per trade. You can see there, this has come up to resistance level, R2 for the day, the daily resistance, and it's pulled back from it. And then from there, it's touched R3. Actually, touched that at the start of. Touched that at the start of the start of this video, I think. So I missed that because I was doing this. Oh well, it's fine. So the next one we'll be looking at, the next sort of like level would be, there's two. There's this level and back to the high. Be looking for puts on them. So I'm just going to move this up so it makes more sense. So the reason I've chose that level is because that was a previous high that we've broken below, and then if it does break above, there's a chance that you'll touch this high again, which would be good for a possibly 2 minute. For this trade, I'm going to go for a 2 minute initially. So I'll just wait for that. I'll just set up. What did I say? 2 minute. Yeah, I'll set this up. Annoyingly, on Markets World, the 2 minute trades get reset to 1 minute trades if you don't watch them. So be careful. The reason why I'm going for this as well is because the MACD is crossed below. It's looking quite weak. The RSI is looking weakish. I reckon it'll probably come back here. There's a chance it'll come back to here though. To highs. We'll see though. Patience. If it just completely drops down, it's fine. So if this just drops down there, that's fine. It just means that's not what we planned isn't happening. So it's no biggie. Just don't try and chase it, especially like if you've got news and the news is positive. Don't try and chase pullbacks down, because they have a tendency to just bounce up really quick. Well, you can see it there. So this came down, that bounced up. It wasn't that quick, but then you had this candle, and then this candle just went straight back up, and then it started lifting up. So it's actually what I'll do. I'll see if it's going to come back to a fib level, which is a possibility of. Yeah, so it could come back to this level. If it does, there's a likelihood that it'll go a bit further. It'll probably come back to here, because it would have broken below this level. That level there. We'll have to just wait and see. There's nothing I'm 100% sure about here. And I wouldn't trade a bounce off that either. just because the MACD is looking like that. The MACD is expanding to the downside, so wouldn't take a call there on that bounce. Possibly get something a bit lower. Let's have a look actually to see. Yeah, possibly. See. Yeah, possibly here. Not sure though. 38.2. There's another reason why that stopped there. Right. Right, so there's a possibility that this will start to climb back up, and if it climbs back up and reaches here, I'm not sure.
Un aplauso, por favor, para Cipoli. Este va a ser específicamente para Cipoli. Gracias.
I'm just going to have a look at a few of the and a few of the pairs. Oh, what's happened there? Yeah, that's just, it's such an unreliable stage of the pattern that that's me having. See, Australian dollar, US dollar, ignore that. Aussie dollar, Japanese yen, cable. What's happening? Cable. See where cable is compared to Brexit. Ooh. Did I just point the wrong? I think I just pointed the wrong bit of Brexit out. Yeah, sorry, Brexit was actually there. Is it July? Sorry, yeah, so Brexit was in it was June, wasn't it? Last year. Yeah, so it was actually there. So let's just have a look at other pairs to see where they should be up to. Yeah, with cable, cable's still above the 200 moving average. It's not exponential, is it? Yeah, so it's still above the 200 moving average, which is an indicator that a really big indicator for hedge funds, for like whether either a stock or a pair is above or below. It's trading higher or lower. So if it's bullish or bearish. So you can see it's above there. So it's bullish. So US dollar is below that. Oh, actually, I'm just going to go back to euro for a second. So that looks like it's getting a bit. No, I'll leave that. isn't good. Just click that. Yeah, so go back to the daily. Just have a look there. Cable note. US dollar. Japanese yen. It's taking that. Moving average. Just stick that back in. Oops. Yeah, so USD CAD is below. Oh, I missed that. Yeah, so USD CAD is below the 200-day moving average. So that's a short. Let's see what's happening with it. Ooh, no, too late. Come back to that. Gold. Gold up there. See, gold's just at the 200-day moving average, but don't know. Right, so there's a possibility this is going to come down here, but the point at which you enter is very difficult. So I think it looks like I was just going to be leaving that. I don't want to be chasing anything, especially not down when it's in a when there's such a bullish move. I don't want to be chasing it down. Right, actually it's like 11:30. Well, pretty much 11:30 now. So what tends to happen is like after 11 things sort of die down. So any sort of like big moves are sort of like quite sort of drawn out, and they tend not to be that reliable. So I tend not to trade after 11 anyway. So I think I'll just pause the video there, and then I'll come back in the New York session. Right, so I'm back at quarter past 1. I've just seen that this is breaking out quite nicely, but I can't just check, but I don't think it can keep going too far. So just do a fib extension on of that move. Right, okay. So that's where I want to get in, like one either here 1.1285 or 1.129. So the two areas. going to delete some of these lines because they're just distracting. If they're not going to be used, just get rid of them, because at the end of the day you just have to get rid of them anyway. So if you just do it while you're waiting for something, if you're waiting for a price to hit, you're not tempted to take an early trade. So it's just basically distracting yourself, isn't it? Right, so here is I have to do a 5 minute there. It's not ideal. I should have been prepared for that. The only thing I don't like about this is the MACD is sort of like leveled out, and then seems to be coming back up. So I'm gonna wait. I've got one there at price is that 775. So I'm just gonna wait until just wait until it comes back up to 811 if it does. There's a possibility it could pull back here actually, because we've just hit 128. I might have done too long an expiry on this. We'll see anyway. Meant to say the expiry for that trade that I just got was past, so I've got another 5 minutes. There is a good chance it'll just continue up to that next level though. 8.5, 285. Although that's not looking good. I know I just said like that's not looking good. I meant that's not looking good for the price going up. The reason why I said that is because there's a wick there, and then you've got on the 1 minute like a couple more wicks, and there's a wick there on the 5 minute, just around about that area. So hopefully we pull back from there. The first bit of support is probably there. It's only mild support, but we're in a strong uptrend, so see what it does here. If we break down below this is good. And the next level's there. Such a terrible entry, that one. It's one of the things with with binary options. There's a few things that are against you, like straight away. Especially with Markets World. Markets World has this tendency to lag the price. And they do it on purpose because they know that the best way to win with binary options is to pick the high or the low. So you've got Markets World like delaying the price. Plus you've got once it does hit a price which causes some kind of reaction, the reaction, if it is a decent price, will often really quickly react. So it'll really quickly like either fall down from a high, or it'll rise up from a low, which is those two things combined are just make it a bit make it extra hard, because they're the ideal points. There's a reason why Markets World do that, of course, like because they make money from you losing. So it's not looking too good, this, for me. We have to wait till that high gets tested. Let's have a look on the hourly. So I think that's in line with that high, isn't it? So what time are we on? Yeah, we could easily get a run up to 1.129 easily. I'm just going to have a look on StockTwits. Just see. Just see what they're saying about euro. To be honest, it's just to see what the Draghi is it? What they said. $3.52. Yeah. Just got one there. Although there is a chance that'll just get bought up and then, yeah. So that first trade that I didn't, that lost. So ideally this is going to just swing up now. Swing up to 1.29 and then get in there. Oh yes. I'll do me there. I've got a few there. Just sort of like 2-minute ones. I think they are anyway, 36, yeah. So I'll just get that because that touched. Alright, so I've got quite a few there. Hopefully I'll just continue to go down a little bit. It'll probably, there's a good chance it'll bounce there though, that's the only thing. Oh, good. Oh, excellent. That's good. It should only be temporary this though. We'll see though. Hopefully not, because I've just got loads of shorts, loads of puts. Yeah, that's good enough. So that just has to stay down for the next 3 minutes. Which it might do, it might not. The next support, oh well, the support's there again. So it'll come back to there. There's a good chance that'll break actually. So just looking at it. Yeah. Yeah, there's a few sort of reasons why this support won't hold. The RSI is coming down, the MACD on the 1 minute's crossed over, the MACD on the 5 minutes crossed over. Yeah, there's a few sort of reasons. We'll see though, because it's quite a bullish chart, so I may be wrong, but and it has just that is a big, well, on the 1 minute it's a big candle down, considering it's just been inching up all day. So we'll see, it might just get bought up. You can see how binary options trading is completely, well, it's not completely different, but it's sort of like it's a slightly different mindset that you have to work around. When with binary options, you're not too fussed about getting squeezed because you can't get squeezed. You could your call or put is either going to expire in the money or out the money or out the money. So it's not a case of entering a position and then it's slowly losing you more and more money over time, and then that affecting your psychology. It's more a case of choosing the right area. You can see there that was the area that I put that in a while ago. That's the area that it's bounced off. I did enter sort of like around here, but there was valid reason for that. But I think like one of the trades didn't work, but the rest of them were all in because they were all around here. But it's just ensuring that you're entering at the right point rather than trying to follow a trend. It's almost counterintuitive. It's almost like it's almost like the opposite of spot forex, and that's alright. So I'm up 50% on the day. Alright, so now I'm up 50% for the day, which is really good, although I'm not too happy with how many trades I took just then. So I'm going to really go easy on for the rest of the day. I should have gone easy there, but 37. And I'm actually ahead of my daily target of 53%. I'm ahead of my daily target, so that's another reason to go easy. It's always best to go easy, to be honest. It's easier to lose money than it is to make money in binary options. I can't see this doing anything else interesting because it's on an upward. It's an upward trend, and it's just inching. It's like really slowly, sort of like moving up and then coming down and then moving up again. It's actually, I'm just going to see where this goes. It's unlikely to do anything else other than continue to do that. I just missed this level. I just realised. And there's them. Right, so that's the reason why that was support and resistance before, and you see it's bounced off that area as well. Fair enough. This area here. Oops. It doesn't work as well as the Asian high and low. There you go. It doesn't work as well as the Asian high and low, but it can be quite useful to sort of like pinpoint where the price is going to go in the New York session. I'm not the biggest fan of the New York session. It's completely different. Well, it's not completely different. It's a different sort of mentality. It's weird. With the Asian session, there's usually not much movement, and then the London session there'll be a big move, and then usually like the New York session is a reaction to the New York, to the London session. So if there is a big move, there's a lot. A lot of the time there's usually either an extension of that big move or a reaction. Well, a continuation of that move or a pullback of some sort. Of course, it depends on the news as well. I'm just going to get rid of this. That's really pulling back from that level. I'm tempted to just leave that and just see how that plays out for the New York session. Gonna get rid of one. Keep that one because it held. And then there's this one as well. Because that's the 261.8 from this fib extension, which is the high and the low of sort of the end of the, well, not the end, is it? Sort of like half, basically like London lunchtime. The reason why I don't use that is because I haven't worked out a sort of definite rule for it. I haven't been through all the charts yet. What I did with the Asian session one was I went through hundreds of charts and just checked that the times matched up. So those times, like Eastern Standard Time, 7 p.m. till 1 a.m. just works. It's the most reliable. Occasionally you'll get the high will be it won't sort of be a candle that sort of like jumps up and then comes back down. It'll inch up, or the candle pattern will sort of like be rounded, and sometimes that means that it doesn't work as well. It's strange. You have to use it as a guide, but then be willing to update it if you sort of see that a sort of a different Fibonacci extension has been used because you've drawn your highs and lows wrong. As we go through this challenge, I'll show you what I mean by that, because it wasn't the case today. It just seemed to be that was the fib extension was the one that everyone was using. Because all we're doing with that fib extension, all we're doing with like any indicator is trying to lower the odds. Increase the odds of a trade winning, because we've got like the people with the most money on our side. So the people who, if a hedge fund's using a fib extension. If a number of hedge funds are using a certain fib extension, then there'll be a reaction to that fib extension because that's where they're getting in. So that's what you've got to follow. You've got to follow the big money, basically. Right, I'm just gonna pause the video now. So I'll be back when something more interesting happens. I'm just watching this Euro USD just coming back up. There's a possibility of like a sort of 1 minute trade there. Just missed it. Oh no, it might be alright. Might still go up a little bit. The reason why I put it on is because I'm waiting for this level 295. Yeah, I'm not gonna take this. I'm not too keen on it. Or am I? I don't know. Let's have a look. Let's have another look. Just do the fib extension from that level. Yeah, you can see there how strong that buying is there. So that's as well as buying its short squeeze, because you'll have people entering here, traders entering there, and then you'll have short-term traders who are starting to short because they think it's finally cracked, and then they get down here and then they just see how quick it comes up and they just get out again. So if it does break above here, we'll get loads more shorts covering, which should take us up to 295, but I'm gonna hold it out for a bit and just see where it goes to. It is a big move that so far, but just in context, that was a really big move. Or even that move down was a really big move. So it might not be finished yet. Yeah, so if you have a look at that, see this move here. So you have this like push down, and then it comes back up, and then there's almost the same length of move as this. So that's what could possibly happen with this. So we'll just see anyway. So this could, I'm sort of guessing it's going to go to 1.3. We'll see that. Just have a look, see what that correlates with. Yeah, it's a 1.3 is there. It's that high, isn't it? So high, yeah. So it's that high. So yeah, I reckon 1.3. Yeah, so 1.3. I think I'll get the next trade there. Right, so I'm going to just take one little one there. That was just a 1 minute trade. I do think we'd break above there, but I don't think just yet. So I'll wait till 6, so just the next minute. Damn. Just see what this does. I might take another one. It starts coming down. Hello. Yeah, let's take another one there. Come on. Same price. It's 50, 654, 3, 2, 1. Right, so we should get a move up to either 1.3 or this level here, so 1.295 ish. We'll see though. So this is where all the shorts get squeezed. This is the reason as well why I didn't choose a 5-minute trade. Just went for a 1 minute. So the reason for that was because, because of what I was saying. Like if there's a potential for a short squeeze, and you have like a big move to the high, like that. As I said before, like if you've got a big move, a fast move, fast big move, then your expiry time should be reduced. If you think that it's going to go further, at some point it'll go further, but the speed of that move means that just naturally it'll come back on itself. Right, I'm going to get what price is that? Right, this one I'm just going to do a bit longer. Although I might just, because what time is it? Yeah, I'm just going to wait. I'm going to wait for 1.3, 1.13. The reason why I'm waiting is because this MACD is crossing up, plus the RSI isn't oversold, so just change. So it's 60% up so far today. As I said before, the risk that I took before was too high. I'm not happy about those trades before, even though they won. There was too many at the same area. In future, I'm gonna do smaller size. I shouldn't have done sort of £2 trades. They should have all been £1 trades, and there shouldn't have been as many. That's the problem. Like if you start moving up too much in the amount that you trade per trade, pardon me, then there's no more room to increase your amount. So if you're sort of like trading around an area, as you trade around that area, it slowly becomes more apparent if the level or the area that you're trading around is going to break or if it's going to fail. So if you start off with like £2, which is 10%, isn't it? Yeah, so it's 10% of the account. If you get that first one wrong, the next one you've got to first of all make back the loss. So you've got to make back £10. So if it's a 70% return, first of all you've got to win that just to make back 70% of your loss. Then you've got to win the next one, and then you're only in profit by like £4. So the sort of psychologically, like the mentality is there for you to increase your bet size or increase your trade size. So for the long run, I mean, in the short term, you'll see big swings in your account size, which can seem really attractive, like really really exciting as well, but that's what gets people in trouble, because that's just greed. It's all about the long-term trade, the long-term sort of goal rather than the sort of short-term swings. Like if you're trading properly, like it's boring. It's incredibly boring. If you're not trading properly, if you're just trading recklessly, then it's exciting, but in a sort of a gambling mentality type exciting. I'm not a big gambler. I don't like gambling. I don't like the buzz you get from it or anything. Alright, so see, like this level here looks like it's going to fail, but the MACD is still sort of looking to cross up, so I'm just unsure about it. Does look like that was a short squeeze though, and it's not got enough momentum to carry on. Bear in mind as well, this is just before New York opens. So what tends to happen is just before New York opens, a lot of the time there's a move in the opposite direction. Right now, that could have been this move, and then this one is the correct direction, but it could be that move, and then we're going to go in the opposite direction. I can't really tell at the minute, so I'm not going to bet on it. I don't like how solid that candle is to go the other way. Plus there's a wick underneath there, I don't like that. There, but it's properly got bought up. And then this is coming down too slow for my liking it. I thought I like it. And it's sort of hovering around that level, so it's bouncing up from that level. No, I just don't like it at all. I don't even like 1.13 anymore. Just going to listen to some Acid Pauly. Right, I think there's possibility there might be a trade here. Just because we're coming up to past, which is 9:30, which is when the stock market opens. So I'm just going to have a look at a few of the charts. Ooh. Capitulation. That cable would have been nice. Look. Your SD card just doing what it does best, which is just following the trend all the way down. Has this tendency to hug the EMAs. Well, I don't like trending charts, just because the pullbacks you can. It's quite hard to gauge where the best place to come in on a pullback is. So I just tend to ignore them. What time are we on? Yeah, it's 5 minutes and then gold will be open. I don't know where gold's up to. Same with the Dow. Let's have a look at the Dow. The daily. So we're still pretty much at highs. There's a few sort of like areas that I'm looking for like long-term trades with the Dow, like the first ones up here, but I'm not 100% sure it will reach there. Hopefully before September, and then September can short it. What's that like? 1, 2, 3. Yeah, which could happen. We'll see. Anyway, there should be a pullback. It'll probably pull back to like this level, and then it should hopefully continue up. Just based on the chart. That's not based on any news or anything, so could be wrong. VIX, nah. Swissy. Ooh, that's nice. Swissy's almost like an inverse euro. Not sure about that. It has sort of reached this support level though. Let me look. So there's a possibility. Nah, it's just looks like it wants to go down. See where this trend line's going. Yeah, there's a bit of room for it to come down a bit, so I don't know. Hell of a move that. Hopefully it just comes back up and then pathetically touches there and then pulls back, but I can't tell what it's going to do. I just don't like it. Times it 20. Just pause and come back in a sec. Right, so this is the opening of New York. So you see that this sort of consolidated area, even though it's really small, in trading, like everything's like sort of like a microcosm of everything else. So like if you look at like sort of patterns on the 1 minute chart, they work pretty much the same as patterns on the daily chart and weekly chart. It's all relevant. There are differences, like, but the for the most part the same sort of terminology is used and everything. So this sort of like consolidation area. Pardon me. So the rectangle there seems to be like breaking out. Actually, I'm gonna try and get that 32. Oh, what? Yeah, so the data disappears on We've got 4 or 5. Let's see where this goes. This is just a 1 minute. That'll probably break out on it. Let's see. Yeah, it's just a 1 minute trade, so like the next 1 minute candle's got to close below that red, basically. So it's 4 or 5. Yeah. So it's got to close below this red line. Which it might do. I'll have to see. But yeah, as I was saying, like that box that I just drew then, like the consolidation area. If you go back to what I was saying about just before the New York Open, you tend to get a move in the opposite direction just before the New York Open, because people or like hedge funds or traders are just getting out of positions just before, well, just at the end of their session. So like there's certain sessions that cross over. Just waiting for this next 10 seconds, see if we get this. It's a 4-5 I need. 6. Come on. No, is it 1? Yes. So yeah, so you get a bit of uncertainty on the crosses between like the different sessions. So if it's obvious like which way the crosses are happening. I suppose like with this one, I mean like the chart was sort of trending up all the way up till sort of like just about an hour before the New York was due to open, and then it dropped back, and it looked like it was going to pull back all the way, but that was almost like a fake move back. Even though you could say it's just a pullback, but it's got a bit more velocity than that. And then you get new traders who are just starting, who are just coming in just before New York, get in and follow, like continue this trend up. I think I'll leave that. There for now. I'll come back when, or if we do get up to 161.8 for the extension from that big move. I'm just gonna, just before I go, I'm just gonna double check. Alright, so we're right at highs. I'm incredibly oversold. I'm tempted to just... I'm just gonna... I'm tempted to put... I'll just do a 5 minute trade. Yeah, if it comes up a little bit more and then starts going down, I'll do another little trade there. Actually, no, it's sort of peeling away from. It's sort of peeling away from the counter trend. So it just so you've got this like pullback, and then you've got this consolidation, and it's just sort of it's looking like it just wants to go higher. Let's just see what the actual high was. Previous high. So it was, like I said before, didn't I? So the previous high was 2959. So it's right here. So there's a possibility that it might come back. Oh no, is it breaking out? Yeah, it looks like that's a breakout. Could be wrong, but it looks like it's a breakout. I'm saying that because of the MACD here. Yeah, there it goes. MACD started just peeling away from itself. I'm gonna just enter a small trade there. Yeah, 2.6 I got, 1 minute. I think. No, 2 minute down. Looks like it didn't have enough momentum to carry on. I might be talking too soon now, let's see. So 38, so I've got another minute, well, another 30 seconds. Let's see. Also, it was a minute. Yeah. Yeah, that one's won as well. So we're on 33.5. So 67%. So there's a chance, like in the long term, even like in this session, we might break out. Might break out of that range. Oh, come on! Might properly break out of that range. That's a fake out at the minute, but it could break out eventually. But yeah, the reason why I got into that before was because on the I think it was like the 2 hour, I just noticed that the RSI was incredibly high. Yeah, so like 95. I think it was higher than that. The RSI like updates itself like on every candle. So if it says like 95 there, it could have been like up to 98. It was really high when I looked. You have to have a look back on the video and see. But on one of them, actually, it might have been in the hour. Yeah, because it's 98 there. But you can see, yeah, that the another thing I look for is like whole numbers. So 1.13 is just a massive round number. You can see that it's sort of peeling away from that. It's not doing it that strong. To be honest, I wouldn't expect it to pull off it that strong because of that high RSI, and it is an incredibly strong chart. So we couldn't even retest like 1.3. We'll see anyway. I'll just wait for it to become more reliable, to give us like more reliable signals. That's quite good. It's not something I'm going to short though. I just don't like this MACD. It would need to break back below 295, which it's doing actually. I don't know, I might just go for one here actually. Yeah, let's go for one there. I'll go for one there and then add to it if it does come up a bit more. So if it comes up to like 1.13, I'll do another one there. Superb. Is this what you want? Is this what you want to see? So I've got another 7 minutes to wait. So there's a possibility it'll come back up, but to be honest, like looking at that, I doubt it. I think we may get a slight bounce here at 1285, which will be here. May get a bounce there, but I think for the most part, for the next say hour, it shouldn't reach 1.13 again for the next hour. Alright, so we might get a bounce here. If we don't get a bounce, that's superb. Superb, and to be honest, it's probably the end of the session for me. I can't see there being anything else too predictive with that. Let's have a look. No. Actually, what's cable doing? USD CAD is at that level. It's just bounced off that level. That's quite interesting. But the RSI isn't oversold. And there's convergence with that, so I might just continue down. I can't be bothered with it. Gold is above on the 4 hour at least. Just turn that down a second. It's not the best of tunes. So like on the 4 hour, it's above the 200 on gold. Just check the daily. Yeah, still. So that's bounced off the 200, and that looks quite positive. That's good. So that's gold. Let's see where gold could go. So I could possibly come back to 1.8. It'll probably just come back to here and then continue up just for a little bit. And you've got this area this gap that's looking to fill. So it should at least get up to 119.2. But yeah, I'm not too into gold anymore. So we've got another about 3 minutes, and then that should hopefully, quite confident that that's not going to jump up like 10 pips. Because to get me out of the money, it'd have to close there. So yeah, actually not there. It'd have to close above that red line, so that resistance area. So it's not going to happen, is it? To be honest, like, I'm quite tempted. Like, if it does sort of come up to around about this area, I'm tempted to add another put to that, because I think like this is done for the next sort of hour at least. Could be wrong. I've been wrong in the past when there's been similar charts. When something's on a tear, it can sometimes just not be stopped at all, and any sort of like inkling of reasoning just gets thrown out the window. Yeah, this is tempting if this comes up. You'd have to reach like 9.2 at least, and then I'd get in for another one. It was 5 minutes. The reason I said 9.2 there is because there's this sort of gap from there to there. Well, it's not a gap. So is this sort of support area here, just there, not about 90. Have to watch it though. MACD's crossed negative on the 5 minute. So I've got another minute left on this trade, and then hopefully that comes through, and then I will have done how many in the money in a row. So that'll be 1, 2, 3, 4, 5, 6, 8, 9, 10, 11, 12, 13. So 14, 15 trades. 15 trades. I'm going to just input this because I'm pretty sure that, well, I've got 18 seconds. So 15 trades, 14 in the money. Percentage wins. So number of trades taken. So in the money was 14. Out of the money was 1. So it's 93% win rate, which is good. Although it is just the first sort of batch of trades were there was too many of them basically. I've set myself, if you're using this spreadsheet, feel free to use it as well. Just you just have to go to either make a copy, which I think like shares it to your drive if you've got Google Drive, which you should do if you can access it. If not, it's dead easy to set up. So make a copy, or download as, and you can download as Microsoft Excel because you don't have to share it like me. So here I've got the first page, which is all the tracking. I'll talk through that in a second. Then you've got the percentage wins. Like, this is an independent page to this, but the tracking works with the end of day balance and the daily percentage. But the wins is a separate, even though it's on a tab, it's a separate spreadsheet, or a separate page anyway, or workbook or whatever they're called. I can't remember what they're called. So when you're using this, you don't have to fill that in, but I'd recommend it just to keep track of like how many trades you're taking, because the less trades you're taking, the better. I mean, like if they're all in the money, that's good, but you don't want to be doing, like 50, 60 trades a day. It's just overkill, because you can lose track and you can lose focus. So if you use the main page on the spreadsheet, you've got first of all your starting balance. Basically, anything that's blue you fill in. So you've got the starting balance, end of day balance. You fill that in every day. Once you've finished or as you're as you're going. Because I've sort of like had nothing to do. I've just been updating it, but it's a good idea to do it at the end of the day, because you can become too focused on how much you're winning. How much money you're making rather than the chart, which is the most important thing. The money aspect is the thing that people it can ruin focus. If you're just concentrating on the charts, you'll be a lot more successful than if you're concentrating on how much money you're potentially going to make. The best way to do it is to think about how much money you're going to lose. You could potentially lose. But the overall sort of trumping factor is the chart. Make sure you're just checking the charts, make sure they're lining up for you, and make sure you're following the rules. So you got a balance, end of day balance, and then from that, the spreadsheet creates the profit in terms of a pound amount. Well, it could be dollars depending on where you're living. And then percentage profit of like how much you've made based on the original balance for the day and where you've ended up. So that's profit percentage for the day. So each of these rows is a day. And then you've got the dynamic target. The dynamic target is one that's updated each day. So moving on to the next day, from 34.33, if I want to increase my account by, over here, daily target 1.3%, 30%, so I type in 1.3. If I want to increase my my account by 30% each day, I need to be looking at this number each day. So I just do that each day. The static daily target is based on just getting 30% each day. That's where you'd be up to. So if you put like so if you type in like 1.3 and you get 30%, that'll say like day one you should get at least 26, 33, 44, etc. And it'll just continue down like that. And then moving across, you've just got the weekly target. The weekly target is just made up from your weekly target percentage that you're aiming for. So you can change that if you want, because your weekly target may be different to your daily target. Your daily target could be sort of like the minimum that you're looking for. The weekly target could be it's sort of like a smaller overall amount, but enough to give you a withdrawal amount. So I've put 150% there. I think like if you go up 30%, let's have a look actually. If you go up 30% each day, so it'll be 26, so you get up to 74.26 in a week if you go up 30%. But my weekly target is 150%. So it's 150% of the initial deposit at the start of the week, or if it's the following week, it's the amount that's carrying through. But that gives me what's that, like £24.26 that I can withdraw. So within the first week, if I made 150%, I'd already be taking the initial balance out as a withdrawal. And that's quite important to reward yourself. Just a quick look. Ooh. So that's. I'm just going to ignore that. I don't like the way that's moving. It's too positive. So yeah, you want to reward yourself like as much as possible, because you want to reward yourself for sitting around not doing much for a good period of time. So across from that, if I just do each day, you've got the standard stake based on what your balance is. So the standard stake you set here, so that would be 2% for the standard stake. With £20 as a start, you can't do less than £1 per stake, so that 40 pence doesn't really correlate. And then maximum stake is £1. I know before, like I was doing £2 trades. That's what I mean. Like it's that wasn't the best of ideas. I mean, it paid off, but that could have easily gone the wrong way. So I'm not too happy about that. The rest of the rest of the day's been fine. It's just sort of the amount that I risked on that one move I wasn't too happy with. So yeah, they're all each of the sections that you have. As you fill it in, like each day, and at the end of the day balance, you'll get this sort of end of day tracking spreadsheet will upfill. The only thing is, if you're taking a withdrawal out, it just doesn't look as smooth. But don't worry about it. It's best to take a withdrawal out. To be honest, it's an aesthetics thing. It doesn't really doesn't make too much of a difference as long as that's steadily going up. That's all you want. Daily percentage tracking. The reason why that's starting off there and then coming down here is because tomorrow I haven't made a profit yet. So, and the day after I haven't made a profit. So it just starts off high and then comes back down. So yeah, help yourself to. What's that? All right. Help yourself to that spreadsheet. If you got any questions about it, just give me a shout. There's another column there that weekly percentage works out how much you've increased that week. So obviously I'm just on the first day, so there's the daily percentage increase is the same as the weekly, obviously. But yeah, I'm just gonna have a look at what's going on with the rest of the charts, and then I might just call it a day because that's a nice 71% sound. That's fine. If I was to continue, I'll show you actually. If I was to continue to do that each day, 1.7, you'll see how quick the account increases. You see, like after 2 weeks, it'd be on £4,000. So, sort of sticking to finishing at a high percentage, account increase is obviously beneficial, but the issue could be that you could, if you don't have. Oh shit! As I was talking, I missed that. Sorry for swearing as well. That was the price that I wanted, but like one is exactly there. Well, it would have been about there. Oh well, can't have them all. Yeah, the temptation is, if you're doing really well, the temptation is to just continue, because when trading is going well, it is pretty easy. The problem is when you think it's too easy. That's when the problem comes. And if you think it's too easy and it's not, and the trades are sort of like, well, the charts are sort of going all over the place, you'll see how sort of how much I try not to trade. So if the chart's sort of like in this area, like I said, that the only sort of place I wanted to enter was here, so that was just one trade of the last, what's that, like 15-20 minutes. Yeah, and it actually hit it, but I wasn't concentrating. But the temptation is, if you think it's easy, you can start going, right, well, I'll just enter here, oh, it might bounce off there, I'll give that a try. Don't give stuff a try. Just sort of, if you're unsure about it, just don't trade it. and always trade like the minimum or the maximum stake that you can that the spreadsheet tells you. Right, I think because of that, because that sort of pissed me off a bit. No, it hasn't at all. It's fine. It's a good sign. It doesn't piss. Never let trading piss you off, because you can. Your brain goes into the wrong mindset for trading if you get pissed off. So don't let it piss you off. Just rise above it. Essentially, it is just in its simplest form. It is just a chart. That is it. It's got no emotions. You're the one with emotions. You've got to control them. The chart's just going to do whatever it's going to do. You get angry at it, it's not going to change a thing. So yeah. So I say I'm pissed off. I'm really not. It's just slightly frustrating. I am just going to leave it there though. I'm just going to have a quick look at the rest of the charts, just see if gold continued to go up. That was the main thing I was sort of looking at. USD CAD. Yeah, I just bounced off that low. Oh well, I hate USD CAD. Alright, so it bounced off the 200 day, which is what I said, but it didn't continue up. Oh well. It might bounce here, but that's all guesswork now. The Dow Jones is filling the gap. Probably fill the gap and then continue down, to be honest. I think. Yeah, it should do actually. Yeah, definitely. Or at least sort of make it up to the 200. That's a possibility. I can't see it getting anywhere above 21.5. Could be wrong there. Could be wrong. Yeah, that'll do me for today. Everything else is becoming a bit vague. Like all this madness. Don't like all that. So yeah, I'll just leave it at that. Yeah, if you've got any questions, just either ask them on the Facebook group or on the blog, or email me. Yeah, thanks for following. See you soon.